Okay guys, welcome to the Judge Janix channel again and to the financial modeling. Okay, today we are going to calculate some financial ratios from the financial statements which we have developed in our previous videos. Okay, and the very first ratio we are going to calculate is the net operating working capital. We will calculate the net operating working capital for 2019 and 2018. Okay, so the net operating working capital is equivalent to operating current assets minus operating current liabilities. Okay, and if you want to calculate the operating current asset for 2019, I'm just going to press equal and then select all the operating current assets which we can find in the balance sheet we have developed before. So just scroll up and go to the balance sheet and select all the operating assets. Okay, so in the operating asset, if you see this balance sheet, in the balance sheet, as we have all the current assets and current liabilities with permanent assets and long-term liabilities, so we can find each and everything here. Okay, so this is the balance sheet and we have to select the operating current assets from here. So the first thing we are going to select is the short-term investment. Okay, for 2019, this one we have to select it and then we are going to press plus. Okay, and after this, no, wait, these are the short-term investment, and short-term investments are not the operating assets. Okay, these are non-operating assets, so I'm going to select this one, the cash and equivalents. Okay, because we are using it in our operation, and I will plus the account receivables. Okay, account receivables, and then again we have to type plus and we will select the inventories. These are the inventories. Okay, so we will calculate the operating current assets. You see, now we have $999 of operating current assets, and after this we are going to calculate the operating current liabilities here. Okay, so again we are going to balance sheet and select all the operating current liabilities. Okay, from the balance sheet. So this is the balance sheet here, and come to the liability side and just select the operating liabilities. Okay, so the first thing is accounts payable, and the account payable is this one. Okay, this is the account payable, and again press plus, and now we are going to select the accruals. Okay, the note payable, as it is not the operating capital, sorry, is not the current asset, that's why we just ignore it. So select both of these two things and press enter. Okay, you see, now we have operating current assets and operating current liabilities here, and here in this cell now I am going to select this one, the operating current assets, and minus the operating current liabilities from this. Okay, and we'll press enter. You see, now we have the net operating working capital for 2019 is $781. Okay, again we are going to calculate the same ratio for 2018 here. So just press equal and go to the balance sheet, which is here again, and we are going to select the cash and plus. We are not going to add the short-term investment. Okay, so the account receivables again and plus inventories. Okay, so this will give us the operating current assets of 2018, and again we will calculate the operating current liabilities in 2018. So again go to the balance sheet, scroll it up, you can see it here, the liabilities. Okay, so this is the account payable, selected, and plus we can select the accruals, okay, and press enter. So we have it here. And now equal operating current assets minus operating current liabilities, you see, and press enter. So the net operating working capital for the 2018 is $588 million. Okay, I think it's very easy to calculate it, and we don't have any problem in calculating the net operating working capital. Okay, now as you can see, the next ratio we are going to calculate here is the total net operating capital. Okay, and the total net operating capital is equivalent to net operating working capital plus fixed assets. Okay, so if you want to calculate it for the 2019, I am just going to select here, I will type equal, and now just now we have calculated the net operating working capital for 2019 somewhere. Yes, it's here. So press enter. Okay, and we will plus the fixed assets in 2019. Okay, so equal, and go to the, again scroll up to the balance sheet, and we will find the total fixed assets for 2019. We will select that, and then we will calculate the total assets. Okay, as net plant and equipment. Okay, wait, let me just check it again for a while. What I'm going to select in the balance sheet, fixed assets only. Okay, only fixed asset, not the total assets. So the fixed assets are the fixed assets are here. Okay, the 1100, because we are not going to include the current assets here, that's why we are I am selecting only this fixed asset, the net plant and equipment, and I am excluding the current assets. Okay, so you see, now we have 1100 of fixed assets, and here I am going to add both of these values. So sum this one comma this one. Okay, and press enter. So now we have the total operating capital for 2019 is $1,881 million. Okay, and if you want to calculate it for the 2018, again we are going to select the net operating capital of 2018, which is here. You can see it here, and press enter. Okay, and now the fixed assets again for 2018 we will find in the balance sheet. So scroll up to the balance sheet, you see, and now we have the 2018 data here. So press enter. Okay, and now we have the fixed asset value again here. So we are just going to add up these values. Okay, so sum this one comma this one. Okay, and press enter. So for the 2015 we have $1,518 million of the total operating capital. Okay, now we can calculate the net operating profit after tax. Okay, okay, now how we are going to calculate the net operating profit after tax for the 2019 and 2018? We will just select the, because the formula is earning before interest and tax multiplied by 1 minus tax rate. Okay, so here I am going to select here in this cell, I will select the EBIT figure for 2019, which I can find in the income statement. Okay, so I'm going to the income statement, just scroll it up and go to the income statement. Here is the income statement, and I will select the earning before interest and tax is here. You see earning before interest and tax for 2019. So I am going to select this one and press enter. Okay, so we have found the 462 million of EBIT, and here I am going to select with parenthesis 1 minus the tax rate, and the tax rate we have in very beginning of this spreadsheet. So you can come here. Yes, for 2019 the tax rate is 35%. I will just select and press enter. Oh, sorry guys, sorry. I have to go again to the same place here, because I haven't typed the equal sign, that's why it's not working. So I will do it like this: 1 minus, now I'm going to select the tax rate from the spreadsheet. Top of the spreadsheet is here, okay, and I will press enter. Yes, you see it's 65%. And now if I want to calculate the net operating profit after tax, I'm just going to multiply this 462 by 65%. So I'm going to do it like this. Just type equal and select this one, okay, and then multiplication and this one, okay, and press enter. Now you can see the net operating profit after tax is equivalent to $300.3 million, okay, for 2019. And if you want to calculate it for 2018, again press equal and go to the income statement and find the earning before interest and tax for 2018, okay. This is the 2018 data, you can see it from here, okay. This is the 2018 earning before interest and tax. So press enter, and again here we have to press equal, parenthesis 1 minus, again I'm going to select the tax rate for 2018, and that is here, okay, this one, and I will press enter, okay. You see again it's 65%. So I'm just going to multiply this figure with this one, and I will find the net operating profit after tax. So select this one, multiplication, and this one, okay, and press enter. So the net operating profit after tax for 2018 is $496 million, okay. So this is the way how we calculate different ratios in the Excel, okay. Now how are we going to calculate the free cash flow? So let's calculate it for the 2019, okay. We can calculate it by just net operating profit after tax minus net investment in operating capital, okay. So here just select the net operating profit after tax for 2019, which we have just calculated here, okay, is here. Select this one, and we will minus the net investment in operating capital. Here we are going to calculate the net investment in operating capital by how we are going to calculate it. We will just go to operating capital is here. So we will deduct the 2018 operating capital from the operating capital of 2019, and we will find the net investment in operating capital. So select this one and subtract the total operating capital of 2018. So here we go. Here the $363 million is net investment in operating capital. Now we can calculate the free cash flow by deducting this amount from this one, okay. So just press equal, select this one minus this one, okay, and press enter. You see now it is minus 62.7, okay, which means that we have spent $62.7 million out of our pocket, okay. And this is the cash outflow but not the inflow, that because it is minus, okay. Uses of the free cash flow, how we are going to calculate it. So here first we are going to calculate the after tax interest payment, okay, and the formula for this is pre-tax interest expense into 1 minus t, okay. So here I am going to select the pre-tax interest expense, which we can find in the income statement, okay. So just scroll it up and find the interest expense in the income statement. It is somewhere here, okay. and less yes, this one, it is the interest expense. Select this one and press enter. Okay, for 2019. And now if we want to calculate the 1 minus t here, okay, so press equal parenthesis 1 minus, I'm going to select the tax rate which is here, okay, for 2019, and press enter. Okay, now you see it's 65, and here if I want to calculate it, I will just multiply this figure with this one. Okay, and I will see, now you can see the after tax cost of debt or after tax interest expense is $54 million already. Okay, and if you are a bit confused that where from these values are coming, so it is the formula. This formula you can see here is for the calculation of after tax cost of debt. I think there is no confusion in this one. Now we are going to calculate the total dividend payments, and the dividend payments is equivalent to preferred dividend plus common dividend, and all both of these data we can find in the income statement. So just press equal and go to the income statement and find the preferred dividend amount there. Okay, in the income statement we can find it somewhere here. Yes, the preferred dividend is here, you can see. And let me show you that this is the income statement. Okay, you can see, you see income statement 2018 2019, and in this statement we found the preferred dividend. Just press enter, and again here we are going to select the common dividend. Okay, this one, the common dividend, again in the income statement. So go to the income statement again, you can see it here. Yes, this is the income statement and this is the common dividend. Okay, so press enter. Now here I am just going to sum these two values and I will find the total dividend payment. So select this one, comma, and this one, and press enter. $58 million we have paid in the form of dividend, and I think it is not very difficult. It is a very simple formula. For 2019, now we are going to calculate the purchase short-term investments. Okay, and the short-term investments can be calculated. The formula you can see here, the short-term investment at the end of the year minus short-term investment at the beginning of year. So the end of year means the 31st December 2019, and the beginning of the year data will be the 31st December 2018. So here I am going to select the short-term investment on 31st December 2019, which we can find in the balance sheet. Okay, so scroll it up to the balance sheet, and we will select the short-term investment here. Okay, is only $1 million. Press enter, and here we are going to select the short-term investment in 2018. Okay, 31st December 2018, and that is 72. Okay, is here short-term investment, and press enter. Now we are going to subtract this amount from this one, so just type equal, select this one minus this one. Okay, and press enter, and the amount you can see is a negative figure. And why it is negative? Because you can see in 2018, the end of 2018, you had short-term investment of 72 million, and now at 31st December 2019 we have short-term investment of only 1 million, which means that 71 million worth short-term investment has been converted into cash. Now the short-term investment as has been decreased. This is the amount which you have converted into cash, or you have invested somewhere else. Okay, now the final thing we are going here to calculate is the MVA and EVA. Okay, we will calculate MVA and EVA for this company. How we are going to calculate the MVA for 2019 and 2018? You can see the formula here. Okay, the MVA for 2019 is equivalent to stock price multiplied by number of shareholders, number of shares outstanding minus total common equity. Okay, so here we will select the stock price in 2019. Okay, so press enter, sorry, you press the equal and find the stock price, which we can find somewhere, yes, at the very beginning of this spreadsheet. Yes, it's here for 2019. You can see the stock price 2019 here. Okay, so press enter. You see, now we have the stock price here and number of outstanding shares again at the very beginning of this spreadsheet. So scroll it up somewhere. Yes, 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 yes. And now here you can see outstanding shares in million. Okay, this is the share outstanding. Okay, so select this one 55 and press enter, and here we will select the total common equity in 2019. Okay, and this one we can find again in the at the end of the balance sheet. Okay, and this is the balance sheet. So total common equity for 2019 is here. Okay, and press enter. Now if you can see, we will multiply both this one and this figure here. Okay, I'm going to multiply it here. So equal this one multiply by this one and press enter. You see 1375, and here again the same amount, this one. Okay, and here I'm going to subtract this amount from this one to find the MVA for 2019. So press equal, select this one minus this one and press enter. Okay, so the MVA for 2019 is $443 million. And now we are going to calculate the MVA for 2018. So again select the stock price for 2018, scroll it up, and you see the stock price is here. Okay, for 2018 you can see the year as well here. So press enter. Now here number of shares outstanding, so equal, and number of shares outstanding at the top of the spreadsheet, you see again 55, press enter, and again here we are going to select the total common equity from the balance sheet. Okay, it's somewhere in the balance sheet. Yes, you can see this is the balance sheet, and this is the total common equity for 2018. Press enter. Okay, now here and this cell I'm going to multiply this one by this one. Okay, because these you can see we have to multiply these two figures. So press enter, and this one again is equal to this. Here you go. Now the MVA for 2018 can be calculated by selecting this figure minus this one. Okay, and press enter. So the MVA for 2018 is $740 million. So this is the MVA, and let's scroll it down, and now we are going to calculate the EVA for this company. Okay, we will calculate the EVA for 2019 by just selecting the net operating profit after tax minus operating capital multiplied by weighted average cost of capital. So how are we going to do it? Just press equal and find the net operating profit after tax for 2019, which we have calculated just before, and it is somewhere here. Okay, let me find it. Yes, net operating or net operating capital. Okay, so it's here for 2019. You can see it's here. Okay, this is the operating capital for 2019. So press enter. Okay, now we have the net operating capital here. Okay, and the operating capital, sorry, this was the net, sorry, oh guys, sorry, I'm just going to select the net operating profit after tax, not the operating capital here. So the net operating profit after tax, net operating profit after tax is somewhere here for 2000. Yes, it's here. Okay, the net operating profit after tax is here. You can see it. We can select it from here, and also we can select it somewhere from here as well. You see, it is the main or the equivalent amount. So net operating profit after tax. Okay, for 2019, press enter, okay. And now here I'm going to select the net operating capital for 2019, which is, let's find it, net operating capital, net, yes, it's here, this one, okay. Yes, is this one, net operating capital, and select it. And here I am going to select the weighted average cost of capital, which we can find at the top of this spreadsheet. You can see for 2019 it is 11.5, okay. So press it. Now here again the same amount, this one, okay. And here I am going to multiply these two figures, okay, these two, and this is not the 12 but it is the weight 11.5. now I made 11.5, press enter, this one multiply by this one, okay. Now you see we found this value, and here I am going to find the EVA for 2019 by subtracting this amount from this one, okay. So equal this one minus this one, okay, and press enter. So the EVA for 2019 is $84 million. And now if you want to calculate it for 2018, again just press equal and find the net operating profit after tax for 2018. Net operating profit after tax for 2018 is here, okay. So select this one and press enter. And here again I'm going to select the net operating capital for 2018. Net operating capital for 2018 is here, and press enter, okay. And here again I am going to select the weighted average cost of capital for 2018, which we can find at the top of, yes, it's here, okay. Press enter. Now again the same way I am going to multiply, okay. Wait, here I will just this one, okay, and here in this cell I am going to multiply this amount by the weighted average cost, okay. And now here I will calculate the EVA by just selecting this one and subtracting this amount, okay, and press enter. So this is the EVA for the 2018, okay. Now because, yes, of course the video became very long, but we have to calculate this return on invested capital again, okay. Let me finish it and then we will see how can we calculate the other things as well. So ROIC, return on invested capital, for 2019 is equivalent to net operating profit after tax, okay, and we can find it here, okay. Net operating profit after tax for 2019 is here, okay. So just select this one and press enter, and we will divide this by the total operating capital of 2019. You can see it here, we can find it, okay. Oh wait, select this one, equal, and this one, okay. Do it, and now here we are going to calculate it by just taking this amount and divide by this one, okay. And you see it's 15.6% for 2019, and if we want to calculate it for the 2018, just select the net operating profit after tax for 2018, press enter, and here we are going to select this one, the operating capital for 2018, and here we will just divide this amount by this amount, okay, and press enter. So 32.67% return on invested capital in 2018, okay guys. Now what we are going to do is we have to do these calculation, and these are the final calculation which we can do at the end, and after this we will finalize this financial modeling 3 statements financial modeling course, okay. After this we will see we will start some next chapter of the financial modeling, okay. Now start the calculation of MVA first, and then we will calculate the EVA as well. So for 2018, let's say if I want to start with the 2018 I will select the price per share, which we can find at the top of this spreadsheet, which is here for 2018. Share price is 29. Okay, you see it came here. Number of shares, outstanding shares, so equal, and again number of outstanding shares at the same place, you see it's here. Press enter, and again we are going to calculate the market value of equity, which is equivalent to share price multiplied by number of shares outstanding. So press equal, select this one and multiply it by this one. Okay, just to do this calculation, share price multiplied by number of share outstanding. Okay, and press enter. So here we have the market value of equity, $1,595 million. Okay, the book value of equity is equivalent to, let's say, we can find it somewhere, I think in the balance sheet. Yes, we can find it in the balance sheet. Okay, the book value of equity, and it's here. Okay, 132 million of equity, you see. Now if we want to calculate it, if we want to do it if we want to calculate the market value or book value, we can do it by just subtracting the market value from the book value. Okay, so we are going to subtract the book value from the market value here. Okay, but wait, I think, sorry guys, I think I have done a mistake here. This one here is not the book value of total equity. We have to revise it because I have select only the equity, and it should be book value of total equity, which is equivalent to, let me find it somewhere here in the balance sheet. Okay, in the balance sheet, yes, this is the balance sheet, and I'm going to select the total common equity. Okay, before I had select this one, this is only the common stock, and I had remove this one. I didn't include this one. Okay, so just make a correction. I will select this one. Okay, and press enter. You see, now we are going to calculate the MVA, which is equivalent to market value. Market value is here. Okay, market value minus the book value. Okay, you see, and it is 740. Okay, and it is a positive figure. That's why we can say that this company has the market value because it is a positive figure. Okay, now we are going to calculate the EVA for this company. So first of all, we are going to select the EBIT, or earning before interest and tax, for 2018. Okay, and this figure we can find in the income statement. So let's go to the income statement and find the earning before interest and tax. Yes, this is the income statement, the 2018 data, and earning before interest and tax is here. Okay, and press enter. You see, we found the earning before interest and tax, and now we are going to select the tax rate, which is at the very top of this spreadsheet. You see the tax rate for 2018, and press enter. Okay, now we are going to calculate the net operating profit after tax, which is equivalent to EBIT, which is here, you see, and multiply by parenthesis 1 minus the tax rate. Okay, and the tax rate is here. Okay, just select it, close the parenthesis, and press enter. So this is the net operating profit after tax. Okay, now we have to calculate the total investor supplied operating capital, and we can do it just by taking the note payable or long-term debts, preferred stock, common stock from the balance sheet. Okay, and we will add it up. So let's go to the balance sheet and take the figures or data of 2018. Okay, for this, let me find it here. Okay, yes, this is the balance sheet for 2018. 18 we are going to select the let me find it, the note payable, because we are going to calculate the operating capital. So this one, the note payable again, and I'm going to plus the long-term debt, okay, the long-term bonds. Long-term bonds is here, okay, and I will plus the again preferred stock, I think, yes, preferred stock, okay, and I will plus the I'm going to select the, yes, this one, okay, the total common equity, okay. But if you can see, we have something here in the short-term investment, okay, so I'm going to deduct this amount because this amount is not the operating amount. We haven't utilized it in our operating, that's why I will deduct this amount, okay, because this is not the operating one. So I'm selecting this one, this short-term investment, and I will just press enter, okay. You see, now we have the investor supplied operating capital 1518, okay, and here I'm going to select the weighted average cost of capital. So weighted average cost of capital is at the very top of this spreadsheet. Wait, it's somewhere here, weighted average cost, yes, this one, and press enter, okay. Now we are going to calculate this one, the cost of capital, okay, the cost of dollar amount of cost of capital, which is equivalent to operating capital multiply by this weighted average cost of capital, okay. So the operating capital for 2019, we have operating capital of 2018, operating capital, wait, we can find it somewhere here, operating capital of 2018 is here, okay. Take it, this one, press enter, and oh, sorry guys, sorry, take this one and multiply it by the weighted average cost of capital, which is here, okay, is this one, and press enter. Now you see the cost of debt is equivalent to $167 million, okay, and now we are going to calculate the EVA by just taking the net operating profit after tax, for 2019. Let me find it, okay, somewhere here. We have calculated it before, net operating profit after tax for 2018, okay, and press enter. Oh guys, sorry, we have to subtract the cost of capital from this figure, okay. So here you can see, just press minus, and this is the cost of capital, okay, we have calculated it right now, and press enter. So this is the EVA, and again it is positive, so the $329 of EVA. And if we want to collect the return on invested capital, we are just going to select this one, because the formula is here, net operating profit after tax divided by operating capital. So net operating profit after tax for 2019 is here, okay, is here, we can find it here, I think this one, yes, and divide it by the operating capital, okay, and the operating capital for 2018, operating capital, net operating capital, yes, operating capital for 2018 is here, okay, and press enter. You see, we found the return on invested capital, okay, and here we are going to select the ROIC minus cost of capital is equivalent to ROIC minus WACC. So we have calculated here the ROIC, okay, and the weighted average cost of capital is here. Just press enter, select this one, ROIC minus cost of capital, okay, and press enter. And now the EVA will be, just take the operating capital, multiply it by this figure, and we will find the final EVA. So this one, operating capital for 2018, operating capital for 2018 is somewhere here. Okay, let me find it. Operating capital, yes, for 2018, you see, select it and come back to the EVA calculation again, select it and minus the ROIC. Okay, this figure, ROIC minus WACC. So here is the ROIC minus weighted average cost of capital, and press enter. Okay, so this is the EVA of this company. So this is, of course, it took some time, not some time but very long time, in calculating all the financial ratios and the EVA and MVA calculation, but it is very helpful if you can see all the things are here, and these things are automatic and interlinked. So if you just change only one figure in the balance sheet, income statement or cash flow statement, all these results, the ratios and the EVA MVA calculation will change automatically, and you can facilitate your investment or appraisal decision. Okay, so all these things we have done so far are very easy and very fruitful and very helpful for your financial modeling and for your decision making. I hope it will help you a lot, and if you have any query or if you have any question, just write it in the comments below and I will answer it for you. Okay, now if you haven't subscribed to our channel, please subscribe to our channel, like and share with your friends. Okay guys, thank you, bye bye, see you in next video.